Thank you so much. Thank you. All right, all right. Now we're going to talk about something really fun. We're going to talk about taxes. Aren't y'all excited about that? Yes, I am. I am. As she mentioned earlier, this is year 27 for me with doing taxes. So either I'm just, a sucker for punishment, or I really love talking about this topic. So I'm going to get to my part. All right. So, and I want to thank the hospitality ministry for serving us and allowing us to have an enjoyable lunch. And like she said, we could have some conversations going. So as I mentioned earlier, I teach financial stewardship, and I'm known as the teacher in the Bible college that gives homework. So I'm going to have some homework for you all too as well. But the first thing I want to do, I want to read a scripture, Matthew chapter 17, verses 24 through 27. And I encourage you to write it down and go back in your own time and read it in full. But Jesus instructs Peter to pay the temple tax to avoid causing offense. So as Bill mentioned earlier, you want to have a tax situation, but you want to be on the good side of the tax situation. And I gave the analogy that we're all going to be in the soup line as we go through life. And you got to decide, are you going to be on the side of the soup line giving the soup, or on the side receiving the soup? And so when we come to talk about taxes, a lot of times people take my class because they think, I'm going to give them this secret recipe to not pay taxes at all. And in some cases, that is true. That is why you want to sit down with a financial educator and make sure that you pay the right amount. And sometimes that even looks like not paying any. But we're going to do everything above board because we're talking about God's money, right? And so just as Jesus instructed Peter, hey, go and take care of the business. But we want to make sure that you're taking care of the business, but at the same time, we want to make sure you're not overpaying. If we all could agree, they don't need our money. So we want to pay the part that we owe. We want to be good stewards of God's money. And so that's what I'm going to talk about today. So I'm going to give you your homework first so that I don't forget to give it to you. Because if I forget to give it to you, nobody's going to remind me that I didn't give you your homework. So your homework is to write down these three set of scriptures, and I want you to go and read it in your own time. And I pray that when you sit down and you get ready to watch your favorite TV show, and if you haven't read these scriptures, I pray the Holy Spirit brings it back to your remembrance that you got to go read these scriptures. So Proverbs 16:3. And then I also want you to write down Matthew chapter 6, verse 34, James chapter 4, 13 through 15. So that's Proverbs 16:3, Matthew 6:34, James chapter 4, verses 13 through 15. And kind of sum it up, it talks about being a good steward with God's money, talk about diligently preparing while avoiding anxiety. Proper planning keeps you from being anxious, and acknowledging God will over your personal goals any day. It's not your money, so you may want to have a conversation with him about, hey, what is it that you would have me to do? And be ready to listen. A lot of times we go into prayer and we roll out our list. We don't sit and listen for the answer. And so, as you mentioned, I am an ordained elder at my church, so sometimes I have to remind myself, you're not here to preach, you're here to talk about taxes. So let's get into it. So I've been given the task of talking about being reactive versus being proactive with taxes. Reactive filing, we just got through tax season. The 15th was on Wednesday. Prayerfully, you all met the deadline, and that you weren't one of those clients that gave us an extra strain of gray hair. So, so reactive filing means I did everything all year, didn't do any planning, and now it's tax day and I'm scrambling. And I want my tax professional to be a miracle worker, all right? Which means you file at the deadline, you didn't do any pre-scheduling, you scrambled to find documents, we asked for certain things, you couldn't find them, and you missed deduction. You left money on the table. That's all it really means when you miss deductions. It means you possibly could have taken advantage of some extra savings that you can put into things like your retirement account, your emergency fund, the fund account. Don't we want to work on the fund account? Okay, so pay attention and we're going to get to the fund account. But above all of that, proper planning avoids stress and surprises. And so my goal is to encourage all of you to be proactive, meaning that you plan all year. Your tax filing and your tax thing shouldn't be the month of April. It should be every week you're watching your finances, you're taking records, you're reconciling your bank statement, you're planning, you're putting aside, extra savings if you need to for taxes, and you're being organized. Now, organized depends on your way of being organized. Everybody doesn't keep it the same. Some people like spreadsheets, some people like things digital, but some form of organization. And you want to make sure that you capture your deductions in real time. You're tracking, you're keeping good record. And you can predict when you are properly planning throughout the year, you almost kind of know exactly to the penny. Because remember, our goal is to break even. We're not looking for a handout. Because remember, when you get those tax refunds, they're not giving you any money. They're just giving you the money that you overpaid. And now they were able to use your money throughout the year to do what they wanted to do. And interest, what? No, it's no compound interest and all of those fancy things that Mr. Bill talked about. It's just that them giving you your money back where you could have actually put the money somewhere in a much better place to better benefit you and your family. All right. So, we're going to talk about why proactive tax planning matters. We want to avoid surprises. It is, when I I get with people and I give them the little envelope, so to speak, if you can imagine, and they open it up like they're about to call out who won the award, and it's, did I get a refund? Did I get a refund? Nope, you owe. So it's we want to avoid the surprise. We want to know where we are and where we stand. Also, being proactive allows you to improve your cash flow, meaning that you can avoid overpaying in certain areas for taxes, whether it's individual or business. So most of what I'm going to talk about today can go either way, whether I'm talking about you individually or if you own a business. And so you want to improve your cash flow. You want a smooth transition for tax time, meaning that you have quarterly meetings with your tax professional, you know where you are, your records are good, and you can maximize your deduction. You want to be able to know that, hey, I did X, Y, and Z that entitles me to a tax deduction. There are over, probably about 1,500 tax laws. Nobody's going to learn all that stuff. However, you want to know how the law, according to the taxes, apply to you specifically. And to do that, that comes from staying audit ready. So what does audit ready mean? I know when I say the word audit, everybody, oh God, I don't want to get audited. But if you live long enough, your number is going to get pulled and you're probably going to get audited. It's not bad. Getting audited is seamless. If you're organized, they're going to give you 30 days to give them what they asked for, and all you have to do is pull it up or get it out of your file cabinet, hand it over. They're happy, you're happy, it's all over, right? Well, in most cases, unfortunately, we're unorganized, we haven't been planning, we can't find our deductions, and we're all over the place now, we're stressed, we're just giving the person at the IRS a hard time. They're just doing their job. Give them what they asked for. And so what I like to do and what our team like to do, we like to help our clients get organized so that they can manage the expectation. If you do get audited, it's a click of a couple of buttons. Stress-free, painless, nobody gets hurt. All right. So in order to have a successful tax filing season where you're not dreading it, one of the first things you want to do, and this also ties into financial planning, because the steps I'm going to give you is going to also play into how you prepare financially as well, because this is all part of it. So you want to track your income. What is coming in? How is it coming in? Is it from W-2, meaning you work a job and at the end of the year they send you the W-2 in the mail? Or is it 1099, meaning you're self-employed or you own a business? Do you have rental property? Sometimes I find clients, they have rental property. They just really say, I just rent it out so I can pay the mortgage on it or whatever, and don't really track it. Those are expenses. So we're going to talk about that when we get to the expense part. And then wherever else, interest, the compounded interest that we just spoke about, all those are streams of income that comes in. And so you want to know where your money is coming from and how much of it and when and how. And you want to separate those things. One of the things that causes audit sometimes is when people commingle funds. And what commingling means is that you take all the money, you dump it in one pot, there's no organization, no separation, it's just all in there, like making a pot of gumbo, it's just all in there. But we want to separate the things. We want to put the vegetables with the vegetables, we want to put the meat with the meat, we want to have some separation. And using bookkeeping tools. Now, I talked to somebody at lunch, I'm not going to call no names, he said, I got it all up here in my head. I was like, no, we want to get it on paper. We want to be able to track it. We want to be able to see it. As Brother Walker mentioned earlier, we want to write the vision. We want to make it plain. We want to be able to see it and run with it. In order to do that, we need bookkeeping tools. You can use app or spreadsheet. Now, I'm not opposed to either option. I tell clients, what will you do consistently and what do you know how to do? That is the way I want you to track your expenses. So if you're a spreadsheet person and you understand it and you know how to use it, use the spreadsheet. If you say, no, I don't want to do all that writing, and you understand the app and how to get into it, remember your password and all those things, then do a digital option. Then you want to track your expenses. This is where it gets fun. You got to pull out the bank statement, you got to go line by line, and you got to reconcile it. And I tell people, if you do this every week, it won't be that bad. But if you wait and go 6, 7, 8 months, and now you got to sit down, now it's daunting, and who wants to do that? Do it at least monthly, okay? I'll let you pass. Do it monthly. Weekly is preferred, but monthly is even better. You want to keep and digitize your receipts, meaning you take a picture of them, scan them, put them in a folder. I'm a little old school. I still put my stuff in a folder. It is what I like Post-it notes. Hey, I get it. But keeping it up in a digital format where I do both, actually. I put it in the file folder after I have scanned it and put it into a file. You want to categorize. You want to know, all of your expenses when you're sitting down. Put them in the categories where they should be. If it's for your home office, if you work from home, is this an expense for children? They always need something at school. I don't care what it is. Why do y'all need to have money all the time? I thought this was a public school or even a private school. I paid the tuition. Why do you need more money? Well, they always have something. So you want to make sure that you put in your expenses where they go. Supplies. If you're a school teacher and I commend you, first of all, commend the school teachers, the educators in the room. All the things that you contribute, you want to put those things, separate those. These are things I donated. Preferably, we're tithers in the room. We want to keep records of our tithing and our offering. The government honors that. They actually give you a tax deduction for contributing to your ministry. Isn't that awesome? That's probably like one of the best things they do. But anyway, it's a whole other topic for another day. So you want to use something that automated, because we get busy. Life gets busy. We forget. Oh, I'm going to do it later. That's my kids when they were in high school. It was always, I'm going to do it. I'm going to get it. I'm like, no, I don't need you to get it. I need you to have already got it. Can you do it for me? So we put off sometimes. Procrastination causes us not to be able to keep good records. So make sure that you do that consistently and, you have a system in place to do that. So I'm going to take a second. Any business owners in the room? Whether it's Avon or if you own a factory. Okay, we got some business owners in the room. Love that. So I'm going to talk about this. And I will say this. Some of the tips that we give business owners, some of these you can actually apply to your household as well. So a lot of times people ask me, well, I want to start a business or I've already started a business. And, how should I set it up? Because how you set your business up also determines how you pay your taxes. Understood the key word, pay your taxes. You're going to have to pay some taxes, okay? But you want to make sure that you're paying the right amount. Make sure of that. So you want to compare, should you be a sole proprietor, an LLC, which is a limited liability company, an S corp, and there's some other options. So you want to be able to sit down and determine which one is best for you. And I hear it a lot. I'll spend a little time talking about this when people come to me and say, hey, I want to start an S corp. Never had a business before. You started fresh out the gate. But someone somewhere said, you don't have to pay taxes if you're an S corp. You should not start an S corp unless you're already generating at least $50,000 in profit. If you're not already profiting $50,000 at least in your business, S corp may not be what you need right now. Doesn't mean you can't do it later. And the reason being is because you're going to have expenses. Whatever tax structure you pick, you're going to have expenses according to that. And so you want to be able to make sure that the business can sustain itself and you're not going into your personal 401k, or you're going into your emergency fund, or you're borrowing money from friends and family to keep the business alive. So you want to make sure that it makes sense. But an LLC is kind of like a sweet spot where you can take deductions throughout the year. It helps offset the tax liability, and it's still all going to depend. So I'm not giving any disclaimer. I'm not giving anybody any tax advice at this moment. I am saying that these are some of the things to consider. Please sit down with your tax professional and make sure that you're picking the right thing for you. Consider an S corp election when profit justified. You got payroll and savings and things that you have to do. When you start an S corp, you have to pay yourself, for real. Like put the money in an account, pay taxes and things of that nature, and it just kind of goes down. And preferably, that's where we all want to be. We want to be in the position to where we have to cut a check in taxes. Because if you're paying taxes, that means you're making some money, and that means there's more that you can put into the kingdom. So our goal is to be cutting a check for the taxes. You want to pay yourself properly, reasonable salary, okay. The business made $100 and you got paid $96.56. Okay, all right, I said reasonable. And you want to make sure that the distribution is what it needs to be. So make sure that you consult somebody. If this is not your wheelhouse, make sure that you sit down with a professional. So some ways to save. Paying your taxes quarterly does reduce the amount at the end of the year. There's a little penalty that people pay that they don't probably pay attention to because it's little, in comparison it's little. But there's a penalty that you pay if you pay at the end of the year versus if you pay quarterly. So if you typically pay taxes during tax time, you may want to consider breaking it up into quarterly payments so that you can take advantage of the reduction. You want to avoid unnecessary IRS penalties. File on time. They love when people file late because there's a penalty that instantly goes on to the tax return that you can avoid just by filing an extension or planning throughout the year and filing on time. Use the safe harbor rule where you can pay ahead and kind of get a credit for being on time or being proactive in your tax paying. That's where that comes in. All right. Retirement planning. Yes, when you no longer have to work, but you work because you want to. I know for me, retirement is not sitting on a porch in a rocking chair. I don't ever see that happening. I love what I do. I love being with people. I love sharing information. And so I think I can do this, until they say, Grandma, you got to come on out. All right, so in retirement planning, when you sit down with your financial professionals, such as Brother Walker and his team, when you sit down, they will help you. And if you're already in retirement, it's always a good time to do a second look to kind of make sure that everything is where it needs to be. But you can utilize things like an IRA, a Roth IRA, a SEP IRA. And these are just some fancy terms for when you're going to pay your taxes. So you either pay the taxes now and don't pay taxes later, which is where your IRA accounts come in. The SEP IRA is for business owners or for self-employed people. You don't pay the taxes now, but when it's come time for retirement and you take the withdrawal, you'll pay your taxes then. So if you prepare and plan, it will all be seamless, it'll be set aside, it all works out. And so you want to be strategic. You want to know now what you need to do for the future, okay? I know a lot of times we talk about the future, tomorrow, and people are like, well, what are we going to do today? When are we going to enjoy today? Well, I guarantee you, this is just a short window of time for the rest of what you have to do. So while you're in the accumulation stage, figure out, sit down, what you need to do now so that later is seamless, okay? So you want to be strategic. You want to reduce your taxable income, whether you're paying your taxes now or you will have to pay them later. You want to make sure that you're paying the proper amount, which means you're not overpaying. And then there, in some cases, you can even reduce it to where you pay no taxes. I know everybody wants to pay no taxes, so maybe if we come up with a plan, everything is where it needs to be. That could be your situation. It depends, but it takes some planning. Deductions and credit. Leverage write-off, meaning that you track your expenses, you make sure you have good records. Let me tell you about write-off. Write-offs have to be justifiable. If you own a bakery, why do you have a $10,000 deduction for a copy machine? Let's make it make sense. Time expenses. Are you value? So this is something business owners don't do a lot. They work in the business and then they don't take their deduction. Thank you. That's why you should have a team. Have some people around you that got your back. Thank you, Brother Walker. So you want to be able to put a value on your time. If you're working in a business, if you have a lawn care service, and sometimes you actually, as the owner, go out and serve. You didn't do? Oh. Well, thank you. Put them to work. Put them to work. All right, and so if you work in the business, you go out and you cut the lawn, a lot of times the business owner that does that, oh, I just went and helped the team. They don't take the deduction for your time. Even though you may not have drawn a salary, put a value on your time. That is a deduction. You volunteered your time into the business. Don't leave that money on the table. Use your tax credit. Okay. And what are your tax credits? That's where you sit down with your tax professional and say, hey, these are the things that I do in my business. What credit am I entitled to according to the tax code? Let's find out and let's go after those credits. What are some of the advantages of talking to a tax professional? You get year-round guidance. Now, if you only see your tax person at tax time, well, you want someone that's on your, it's almost like an in-house employee or someone that understands the vision of your business or your home. What are the things that you and your family are looking to do? We got kids getting ready to go to college next year. My husband is getting ready to retire in 5 years. What is going on with your situation now and later? Let the tax professional help you put together a strategic plan so that whatever you get ready to do, you have prepared for taxes or you have prepared to not overpay. You want to be prepared. I call it tax preparation. You want to prepare beforehand. And you want to have like a check-in, like mid-year check-in, or I prefer quarterly with my client because, days of old, we could meet with clients twice a year and they'd be fine. But now life is kind of moving a little fast. I don't know if it's just me, but it seems like things are happening a little faster than they normally did. And so situation change, life happens. And so you want to make sure that you do those quarterly check-ins. Hey, this has changed, this has improved. I may need to, do some check-ins, some check-outs, like those warning lights that we were talking about earlier on the car. A tax professional can identify some things, say, hey, if you don't make a change here, you may end up having this or that. All right, so I got more homework for you. Along with reading those scriptures, I want to make sure that you hear that. You want to track your income and expenses, and you want to reconcile your accounts. You want to do that monthly, meaning you're taking your bank statements and you're sitting down at the end of the month and you're saying, okay, we're going to find out how much we ate out this month. We're going to find out how much was the light bill. Like, why did the light bill, or the water bill? Or we're checking our credit statements. We're making sure that nothing is going on that we're unaware of so that we can get ahead of it. Sometimes we can find deductions and we can call the company and say, hey, I noticed that I was charged $28. What is that for? Just like put you on hold and they come back, oh, I'll take that off. That was an error. But if you don't catch it, it's not like they're sitting down trying to catch it for you. So you better make sure that you checking. Hey, I want to know why you charged me $3.12. Oh, it's just $3. It adds up over time. And I'm sure you can do other things with your money. Quarterly action, review your finances. And I always say, have a second set of eyes. Pay your estimated taxes, whether it's individual. If you normally pay, you want to start doing that quarterly so you can take advantage of that credit that they'll give you for paying in advance. If you're a business, you should pay your taxes quarterly. And you want to adjust your strategy as needed. As life happens, as things change, you want to be a person, like you said, don't be so prideful. If you've made a mistake or you owe back taxes or if you haven't filed in a few years, let's tackle it. Let's have a good name above all. Let's make sure that we're doing the things that we need to do to be able to be good stewards of what God has entrusted us to. And if you're meeting regularly, you'll be able to run tax projections so you'll know what's coming up ahead. You'll be able to adjust your withholding, whether on your job or in your business. You're in planning, making purchases that are reasonable and make sense. You can maximize your deductions, contribute to your retirement. That is something that our team specializes in. Get with Mr. Walker on what you should be putting in there because it all depends. And like I said, stay audit ready. If you're organized, you keep good documents, you review regularly, and you retain good records, you'll be ready. They ever send you an audit letter, you'll be like, got that, I'm good. Avoid some of the mistakes by not keeping organized. And so I want you to take action today as I close. I want you to choose your record keeping, how you're going to organize everything. Schedule a monthly date with you and your bank account, your bank statements. Y'all should be dating at least once a month, checking things out. I prefer weekly. Set up a quarterly or estimated time to meet with your tax professional. And if we have any questions, I'll hang around afterwards and I'll be glad to talk to you all. You all be blessed.